Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some key FX crosses. I'm starting off with the euro dollar, and here we see a rising trend channel on the daily chart in place since June. The floor of the channel is currently near the 20-day moving average at 136.17, shown here in grey. And basically, we had the golden cross buy signal at the end of July, and it has come up with the goods. You could have bought that around the $134 mark, and had a reasonably easy ride to the upside. The situation now is that we've had new support coming in at above old resistance since the end of September, and that pattern is now continuing into October. So very, very bullish here. In fact, you'd expect an acceleration to the upside in order to deliver more pain to the bears. As I said, 144 is the top of the channel, and 140 could probably hit very, very soon with the next few days, given the pace of the momentum here. The RSI is sort of backing up the buy argument here as well. Decent trend line from July, and even though we're in the overbought area at 76, I would say that there's no real end in sight to the upside here. A related market in terms of the euro is euro sterling, a key cross, and the interesting thing here is that we've seen a 50-day moving average sell cross through the rising 200-day moving average at the beginning of the month. That gives us the hope that in fact over the next couple of weeks we'll see the 50-day line then catch up with the 200-day moving average at 85.34 and deliver us a golden cross buy signal. Those who are sort of aware of technicals will remember that the sweet spot in any rally for a stock or a market tends to be in the run up to a golden cross buy signal. So we could be in that sweet spot over the next few weeks, and if that is the case, then it would not be difficult to see a top of 2013 channel target as high as 89 pence over the next 1 to 2 months, say by the end of the year. So very encouraging position there at euro sterling, especially obviously if you are someone who likes the single currency. Finishing off with dollar yen, and here we have a very interesting and intriguing situation. Obviously, the momentum here over recent months, since the end of this time last year, has been in favor of the dollar, but it does look like the cross is petering out. The greenback's petering out, and we have RSI weakness in the oscillator window. We have a very strong resistance line from May running through 98.39, which is the level of the 50-day moving average. And really, at the moment, even though it feels sort of counter trend and counter intuitive, it may be worth being a seller into strength up to the 50-day line, looking for a break to the downside. The sort of my favorite target is actually back to 90, because I don't see why this cross or this pattern should not end up with a break of 97 yen leading down to that zone. But obviously there could just be a sort of a more sort of tame retracement, which takes us back to sort of 95, 96, and then we go sideways. But I'm going for a bigger call here, and really for a breakdown. I think the dollar's in trouble, as we've seen from the euro, and it may be that dollar yen is going to lead this situation to the downside. That's it for me. See you again next time.